What's up, guys? It's your boy Mr. Mario. Let's go. All right. So I know it's been long since I even did a video, so let me just give you an update about what recently happened. Right, so I was trading emotionally, meaning like some things happened, and while those things were happening, I was actually in a trade. Right, I couldn't concentrate, and with no idea why I even did that, I over risked. Right, and that day, out of all days, right, it just went to the opposite side and took me out of the trade, which means to say I lost the trade. Right, and because I over risked, I lost the account. All right, so what I did then, right, I was so depressed. I was like, no, all my hard work went down the drain, blah blah blah. I got another account, and then I started trading that, and within 2 days, right, I brought that account back up like super fast. Right, so that's when it hit me. It's like, it really doesn't matter how long you have the trade or the accounts. What actually matters is that you do it right, and you do it with a clear mind. Right, so with that being said, for those of you who actually lose accounts, for those of you who when you take trades and it just goes the opposite way and you lose trades, it's all right. There's always it's always a lesson for you to learn and move on. All right, with that being said, I came up to this idea. Right, I'm going to show you one of my models. Right, so I have a few models that I use and trade depending on that day, whether I'm busy or whether I'm okay, I'm a bit free, so I can use this model instead and all that. So I'm going to show you a model, and bear in mind, this is going to be absolutely free. Right, it's going to be free. I'm not gonna sugarcoat anything. You guys can go down to the Discord, ask me anything about this strategy, and I will help you guys. And it's only for this strategy, all right? Because the other strategies, some actually paid me for like one-to-one mentorship, and I taught them how to do it, so they are doing it. So it's not gonna be fair if I'm gonna show that for free, right? But for this, in this case, I've never taught anyone this model before, because for me itself, it's more of like this is just like a backup model, right? Like, I rarely use it, but when I use it, I make sure I only take A+ setups. With that being said, let's go on to the video. Okay, so what is this model and how does it work, right? So as you guys can see in your screen right now, right, I am in a trade. Right, I definitely am in a trade, and right before this trade, I lost the trade. Right, I'm gonna show you what happened. First, I'm gonna show you what happened. Nah. Let me give you a concept behind this trade first, and then you guys can actually see why I lost. Right, so what this model basically means, right? There's only 3 fundamentals for this course, or I mean for this this trading model. Right, there's only 3 things we're gonna see in the market. Right, this accumulation. All right, next we're gonna see accumulation. Right, next we're gonna see from here it manipulates. Sorry, let me do that better. Then we're gonna see it manipulate. Right, let me put that in green. All right, and then we're gonna see it distribute. All right, this is the only 3 things we want to see: accumulation, which is the red one, manipulation, which is the green one, and the distribution, which is in the blue. All right, so this is the only 3 things that I want to see the market do. Because if you zoom out and you just take a look at that market, right, the market always moves like this. Let me just go on to the goal so that I don't disturb my trading. Right, oh yeah, let's just take gold for example. Right, This was the setup I had, but I don't trade gold, so I just was watching how gold was playing out, right? So take a look at this, right? What do you see here? That's accumulation, right? Why is it accumulation? It's just doing this, right? Okay, what do you see next? A manipulation, correct? You see a manipulation right here, this red color. It's right manipulation. And what do you see right after that? I know the colors are being jumbled up, but I'm sorry guys. Right, what do you see next? Distribution. Right, yeah, so this is literally how the market moves every single day. Let's take a look at this. Right, sometimes it does this: accumulation, manipulation, another accumulation, manipulation, right, and then distribution. All right, let me just pause you guys right there. I need to go break even on my trade. All right, I'm done. Okay, so let's carry on. All right, oops. Yeah, we hit the break even. So now my final TP is here, right? So I already got like half of my trade. So if it goes back up and then it goes down, we win the trade. But being said that, what do you see here? This green box here: accumulation, this upwards movement, manipulation, and distribution, right? I know this is a concept that, you know, many preachers, and you know it doesn't work and all that. It's because you have to pair this with a lot of things, which I'm gonna go about in a while. This video may take some time because I'm breaking down my whole strategy to you guys, right? So if you guys really want to, you know, try this out, stay tuned till the end of this video. All right, so what do you see here? Right, you just gotta wing it. You just gotta see it. Keep on seeing it until you will realize what is accumulation, what is manipulation, what is distribution. Trust me, at times you will mess up, right? Like how I messed up just now because I thought it was an accumulation, whereas it wasn't, right? It happens. You don't win all trades, right? Yeah. So, what is this? Accumulation. What is this? Manipulation. And what is all this? Distribution, right? So let's say accumulate, and when it manipulates, you take a short trade, maybe let's say over here, right? Stop loss above this, and you maybe take a 1:2 only, right? Yes, it goes to drawdown, but eventually what happens? It hits your TP. If you raised $1,000 for this, you would have gotten $2,000 for this, right? And if let's say your higher confluence was way down here, there would have been 3K, right? Or I don't know if it goes down lower, but yeah. So all this works only if you have extra confluences, right? All right. So you know how I know it has been long since I took a video. My mic is dusty and it's itching my nose. Right, just give me a moment, let me wipe this. If I need towel. Nah, I don't. All right, it's okay, let's just carry on. Okay, so next, what is the second criteria, right? So first criteria is the AMD, accumulation, manipulation, and distribution. Second, can say context, or second important thing, all right? The second important thing is the time that we trade, all right? I only trade 3 times, right? It's either the Asian session, the London session, or the New York session, all right? With that being said, if you're trading Forex, right? If you're trading Forex like Euro USD and all that, the timing will be different, right? Go to your trading view, go to the 4-hour candle, all right? And then see the 4-hour candles, because sometimes because of daylight savings time, right, the 4-hour may shift the timing, right? So in this case it's 3 a.m, 7 a.m, 11 a.m, and then back to 3 p.m, 7 p.m, and 11 p.m. right? So the times I trade, write this down for the times I trade for what do you call that, Asia session, right? It will be 11 a.m. For London session, I trade, wait, it's 3 p.m. And for New York session, I trade 7 p.m. Alright, this is the timing I trade for Forex. Alright, if, right, wait, what? 12 drawings. Okay, if you're trading oh, sorry guys, sorry, I'm so sorry. Rewind. Alright, so this 11, 3 and 7 is for gold. It's not for Forex. I'm so sorry. This is for gold. Alright, I just realized the timing was a bit weird. Yeah, this is for gold. Alright, whereas for Forex, right, it would just be, I guess, 1 hour before. Alright, so it would be it would be 10 a.m. 2 p.m. and 6 p.m. Alright, this would be for Forex. Alright, gold Forex. Alright, and if let's say you trade what is that called, futures, right? If you trade futures, it's gonna be about the same like gold, right? It's gonna be, yeah, so for futures it's gonna be 11 a.m. 3 p.m. and for New York session it's gonna be 11 p.m. Right, this is the only difference, right? This is the only difference. So remember all these timings that you can trade. Okay, so with that being said, you guys got the first one, the AMD. If you don't really recognize it, go back, go and watch it again. Basically it's accumulation, manipulation, distribution, right? Let me see, accumulation. Oh no, I don't have accumulation here. Let me see. Sometimes you don't even have it, right? Yeah, so you can count this: accumulation, manipulation, distribution, right? You will just see this every single time in any time frames that you go to. You will always see this, right? What do you see here? Right, it doesn't have to distribute all the way down also, you know. See this, accumulation, sorry, accumulation, manipulation, distribution, right? You will see this every single time. Okay, with that being said, there's the second part. So what's the third part? The third part will be, what am I missing? Oh yeah, okay, so the reasons why I said the timing, right, all the timing is because that is when a new 4-hour candle happens, right? In this case it was 6 o'clock, a new 4-hour candle started, so we trade that 4-hour candle specifically. All right, let me go through an example. For example, yeah, let's we're on a goal right now. Let's take this, let me see this, what time is it? It's 3 o'clock. I'm just winging it. I may not have the best example because I don't trade gold, but let's just see, right? So let's say we're trading London at 3, right? Okay, so this is 3 o'clock. Sorry, this is 11 to 3, right? This candle ends at 3. So a new candle is about to start up. The candle that you see, big ass candle here, it's a new candle. Okay, don't pay attention to it first, I'll come to it. All right, so this is how the strategy goes. All right, I hope you guys know what's a fair value gap. It's just this gap here. I'll show you all my indicators later, but just bear that in mind. All right, the first thing we're gonna do is gonna go 15 minutes. All right, so this is where 3 o'clock starts, right? So on the 15 minute, we just have to see two things, right? We're gonna go look for liquidity sweeps or a fair value gap. Okay, I'm turning on my session indicators because that's where the best liquidity sweeps are at. All right, you see this Asia high, right? We're gonna mark Asia high. Let's just put a session high. Previous day New York low, right? That's gonna be session low. All right. Let me just label it. All right, and turn off the indicators. All right. Next thing we're gonna see is the gap. All right, we gotta look for the gap. All right, so this is a 15 minute, right? So we're gonna put 15-minute fair value gap right about here. Okay, I know it may get confusing with the fair value gaps right here. Let me turn them off. All right, so we have a gap over there. What do we have below? We don't have anything, right? We don't have any fair value gaps here. We're not going to use mitigated fair value gaps. Mitigated means as long as we have a fair value gap but the price already been through it or even taps it, we're not using it, right? Because we want A+ setups. Okay, so we see this, we go up, we go down, nothing. All right, we go back to the 1 hour. This is where we're gonna look for our things, right? We're either gonna look for 15 minute or the 1 hour, right? This is the only two times we're gonna look for fair value gap for confluences, right? Where the price has to hit when the new candle opens, right? I mean, you can look at the 30 minute, the 4 hour, but I just use 15 and 1 hour, right? Okay, and it decides to lag. All right, we're back. All right, so 15 minutes, right? Right now, the only thing we have is the 15 minute on top. We don't have anything below, not even the 1 hour, right? Wait, do we have a 1 hour on top? No, we don't, all right? Oh, we have, all right. So the 1 hour is bigger than the 15 minutes. So I'm just gonna mark the 1 hour since it's like, you know, overlapping, right? Right now, we have marked everything. We're waiting for the new candle to open and start, right? So now is when the new candle is gonna open. You'll see this candle change, right? Look at that, it just changed. Okay, so right now we're gonna look for the first thing that I said, right? Accumulation, manipulation, and distribution, right? What do you see here? Do you see an accumulation? Do you see a manipulation? Do you see a distribution? That's all we're gonna look for. But in this case, right, the candle just blew past, man. It just blew all the way up, right? We don't see an accumulation here. We just see a downward move and an upward move. Is there any? There's none, right? So we go to the 15. Let's see. Maybe right now the candle wants to go up, right? Maybe it just decides to go up because we have all this liquidity here on the left, right? There's no fair value gaps, which actually suggests us that, yeah, it's gonna go up, right? This is all liquidity. So being this, you should be adaptive, right? You would think that, okay, maybe it wants to sweep session high before going down, right? What else do I see here? It's creating new fair value gaps, new 15-minute fair value gaps as it goes up, right? What does that tell you? If it's gonna, you know, retap this 15-minute fair value gaps, we might have a chance to go up a little, right? So let's see. The price now is accumulating, right? Accumulating, but it still decides to go up, guys. It still decides to go up. Remember, I didn't cherry pick this trade, right? It just was there and I just took it. If we don't get a trade, then we don't get a trade. Nice. I see accumulation and a manipulation, right? Right there. Do you see that? Let me change this to a Q. I see a small accumulation. I may be wrong, right? See a small accumulation. I see a manipulation move downwards. Put that as red, right? And I see a small distribution, right? I could be wrong. It could just hit down all the way, but if I'm right, it's gonna hit up. Look at that. look at that, guys. What I said, right? It came down, it didn't respect the first fair value gap, right? So we delayed it. It came to the second fair value gap, right? It did a small accumulation right here, right? If you can see, right? It just did a small accumulation, not even a big one. All right, small accumulation, a manipulation, and the distribution. So now to the next part, right? How do we enter it, right? How do we enter this trade? Two ways. First, we're gonna see an inverse, right? We have a small fair value gap here, right? We have a small fair value gap here. Let me go back. All right, we had a small fair value gap here, which inverse. So this is entry number 1, which is a risky entry. All right, stop loss below the low, right? And we aim, well, let me tell you where to aim right after that. Let me show you the entries first. This is our first entry. Second entry is when a candle closes above here, so which gives us a change in state delivery, CISD, sorry. So we broke above that, we closed above that. So this could be our second entry, right? All right, so let's go to the third entry. What is the third entry? Third entry, which is more safer, but it's more, how do I put it? It will give you lesser entries, or rather lesser risk to reward, right? So the third entry is the 5 minutes, right? We see a gap right here. We go back to the 1 minute to see how it reacts from there, right? See that it tapped, it rejected, so we do the same thing. All right, so we are having a protected high right here. We can do this and maybe aim this high, right? And that's only a 0.83. I mean, if you're into that side of things, right? See, it hits, because right, this will show you that you are protected. Okay, so let me show you where we can aim, right? We go back to the 15 minutes and we see, okay, so there is a fair value gap right here. There's a 15-minute fair value gap. Let me just hit back a bit. All right, okay, so we have a 15-minute fair value gap here. Price can do two things. One, it can either tap this and drop back down, right? Because it's still volume. Or number two, it can break past this, correct? So our final TP could be this high right here, right? Let me put this in green. All right, so we go back to the 1 minute. We took a risky entry, let's just say, put it here. Our final TP is at the green line, which is this high right here. That is a 3.5, right? I like to use this fair value gap indicator because it shows me how strong the market is. So we have all these fair value gaps above on the 1 minute. We have this 15-minute fair value gap right here. What I would like to do usually, right, because this fair value gap is a 15-minute fair value gap, I would go break even over here, right? Exactly at this point, this high right here before the fair value gap, I'll go break even, right? So once it taps, all right, I go break even, I take out partials, and I keep the rest running up there, right? Let's see, we may not even hit our full TP, right? Because I really don't know. Yeah, look at that, right? So we at least secured partial. And what did I say before this? It can hit this 15-minute fair value gap and it can decide to reverse, right? That's what I said. And look at this. The moment it hit this fair value gap, the first time it closed, it came back down, it went back up, it gave a reversal, right? It gave a, or rather, let me just go back. Let me show you my thought process when I see this kind of moves, right? I go to the 5 minutes. So this is the only time you can look for 5 minutes, right? The 5 minute is only to see extra confluences, whether is it going to reverse, right? So the 5 minute is to see whether it's going to reverse or continuously going to go up, all right? So we're just going to put that, all right? And then we're going to see how it reacts from there. We have an accumulation. Let me delete the 15-minute, right? Because once it closed the 15-minute, we had a 5-minute above. Accumulation. Do we have a manipulation? We have a manipulation, right? we have a fair value gap right here, this purple small thingy right here, right? Let's mark that out. Let's see if we inverse. Nah, we didn't inverse. Right now we inversed, right? We inverse, so I would have entered there. Whoa, 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 whoa. What just happened? Okay, I would have entered here with my stop loss above here. Right? Let me see that. Yeah. We've entered here with the stop loss above here. Right, above this high right here. Because this is where we entered, right? This is where it inversed. And then I would see on the 1 minute itself, I see mitigated fair value gap, meaning the fair value gap is not valid. This is not valid. This is not valid. This is not valid. Sorry, this is not valid. This is not valid. Bear in mind, I only saw it until here, right? I didn't see all the way end. So let's see whether it goes back down. Right? Here, where would I have took partials? Same thing. Go back to 15. There's no fair value gaps, right? And look at where I did it. And 5 minutes. There's no fair value gaps. This just shows me that for sure price is gonna go down, right? So I might do it at this swing low, right? This could be my take partials. Let's see. All right, we hit break even. We are in break even. It has not touched our entry point yet. Let's see what happens. It goes down and bam, full TP hit, right? And how much was that? That was a 1:4.8, 1:4.98. That's a 1:5, man. Right? So you guys will see this every single day in every market. You guys can check it out. So let's go over this, the ending part of the video. I know it's a long video, right? I try to squeeze as much things that I wanted to say so that you guys can check it out. And yeah, let me just close this out. Oh, we nearly hit TP. So right now I see the price returning back, but I don't see anything that okay, what I'm doing right now is seeing the center point of this rejection wick. Right, it's a thing I didn't know until last week, right? I was talking to a trader and I found out that rejection wicks, it's also a thing where a point of place where price can reverse apparently. So ever since then I just started looking at it, but it's not a big confluence for me or whatsoever, right? So I see this, it broke the center point of that, went back up, retapped. All right, so I'm just gonna wait, right? Or maybe what I can do is put my stop loss at this 15125 point. Oh, let me see that. All right, we're close to TP. Right, I don't know if you guys can see, but we're in the blues. Where's the camera? We're in the blues. All right, so a little bit about this account, right? This account was in prop firms 10k accounts. When I was testing this strategy, this account was in 9,200, and I used this exact trading method or concept or model or whatever you want to call it, right? I used this. I use this exact same trading model to bring the account up to, where is it now? 10167, man. 10167 from 9,200. So that's why I thought, let's just give this model to everyone for free. All right. Okay, where were we? Oh yeah, we're gonna go recap. Before we recap, this is the trade that I wanted to show you guys, right? I thought, I was wrong in trading this way, but okay. So what happened earlier before this trade? I'm going to show you the trade that I lost, right? I lost about $300, right? So yeah, this was the trade. So let's go back. Yeah, what was it? Here. So everything was done. Let me delete this. Everything was done. Ignore this for now, all right? Everything was done, and I was looking at this. Let me off this. Okay. Then I was like, okay, so it's reacting off this 15-minute fair value gap. right? So it might be doing its thing. And then I saw this small move here, and I was like, wait, this actually looks like a accumulation to me, right? So I marked this out, and I was waiting for manipulation, right? So I thought, oh, okay, this is a manipulation right now, right? And then I took a sell at this candle right here, put the stop loss above here, and I took the trade. Same TP, man, same TP, right? Same TP all the way down here, right? And what happened next? It went down, it hit my break even, right? For some reason, I wasn't taken out because of the spreads, right? And it hit my stop loss, and I lost 300, right? And then I was like, wait, why did I lose? Okay, let me see if there's any. Remember what I said, the 5-minute fair value gap is going to help you to see if the price is really going to go down or is it going to go up, right? It's going to give you a re-entry, basically lah. The 5 minutes is just going to give you a re-entry. And then I saw this, right? Oh wait, there's a 5-minute fair value gap right here. I'm just going to leave it green, guys. There's a 5-minute fair value gap right here. Alright, let me see how it reacts to this, right? So I went back to the 1 minute, and I was looking at it, how it's going to react. Is it going to sweep these highs right here? No. So I was just looking at it. When this move happened, right, something caught my eyes because of the break-even line that I draw here, right? I was like, oh, wait a minute. Wait a minute. This whole thing looks like an accumulation to me. You see what I see right now? I was like, wait, this whole thing is actually accumulation. Right now is the real manipulation into this 5 minute. Okay, so right now, right, if it's gonna disrespect, if it's gonna go above this 5 minute, I'm gonna look opportunities to buy, right? And I'm gonna go buy the trades. Maybe I was wrong, right, with my bias. So I'm gonna be buying it. And yeah, when I mean bias, I don't mean like daily bias and all that. It's just like, what am I thinking? Is it gonna be a buy or a sell, right? So I was like, okay, maybe this is the real move. Right now I see this, right? This accumulation. Next I see this manipulation. Oh. See this manipulation. So I might be looking at a sell trade right now, right? So I was like, okay. So with that being said, maybe let me change this color to something brighter. All right. Let me see if I have an entry, right? So I was waiting for an entry, and boom, I saw an entry right here, right? Look at this. There's a tiny inverse fair value gap. What the hell am I talking about? No, I'm sorry, guys. There's a tiny inverse fair value gap right here, right? So what did I do when this was closing in right here, about here, right? It's just that I see that I know the candle is going to be super strong, right? Even if the candle is going to go back, it's definitely going to close this fair value gap. So I took a trade, if I'm not wrong, at the midpoint of that. Let me see. Yeah, I took it at the midpoint. Right, I took it at the midpoint. Look at that. I took it at the midpoint. The moment it closed, I just took the trade. And right now, we are here. Right? We're right here. Okay. That's about it, guys. So, it's already, I guess, 33 minutes for this video. We're gonna do a quick recap, and then we're gonna close this. Oh yeah, I'm supposed to show you guys my indicators. But let me just do a recap first, alright? So right now, let's say this dotted line is the 3 p.m. or the London session or whatever is the new 4-hour candle starting time, right? That's my drawing tools, man. Okay, so right now, let's say whatever the price can be, right? It's just moving up and down, blah, 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 and the 3 o'clock starts. Okay, 3 o'clock starts, right? Let me make it cleaner for you guys. Right, 3 o'clock starts. Cool, 3 o'clock started. The moment it starts, we go to the 15 minute, we go to the 1 hour, right? We look for unmitigated fair value gap. Let me change the color for you. All right, we look for an unmitigated fair value gap. Maybe we have one here, or maybe we have one far behind the price, or whatever, right? We have one here, right? Right now the price is here. Correct. So what do we do next? We look for where the price wants to go. It could be going down, then suddenly goes up, blah blah blah, right? And then we see a 15-minute fair value gap here, a 1 hour fair value gap here. And while this is going up, right, it may also, create another 15-minute fair value gap here, right? It doesn't matter, right? We just gotta see it do something, right? And then it decides to go down. Let's just say, for example, right, it decides to go down. This is a new fair value gap, because I know many of you would have that question: what if it forms a new fair value gap while it's going up? Because I had the same question, and this is what I realized, right? And then it does this. It accumulates here, right? And the next thing you know, oh wait, this is supposed to be in green, right? And then it manipulates, does a inverse fair value gap. You buy, break even, and it goes here, right? So this would be a full TP, right? Basically, this is the whole setup, right? Goes up, accumulate, manipulate, and distribute, right? That's about it, guys. Even if this wasn't here, let's just say this wasn't here, right? All this was just nothing, right? And the price just continuously goes up into this. Oh wait, let me do it better. Price just continuously goes up, accumulates, manipulate, and distribute, right? It's the same thing, right? And along this, there is no fair value gap, and only here you see a 15-minute fair value gap, right? When the price comes to this point, this is where you're gonna break even, or rather you can even break even around here, right? Around this point you can just break even to see what the price does here. For all we know, the price could actually just just manipulate over here, accumulate there, manipulate here, and then distribute higher, right? For all we know. So that's why break even is very important. We break even, we see how it reacts from here. It could just break down price, and since we are already in the price of the trade, we don't meddle with the trade, right? So we just wait and see what happens. Maybe it can tap here and then fly back up. Anything can happen, all right? So that is why whoa, that's a lot. So that is why this candle here is super important for me. And look at that, we're gonna hit TP, right? So this is why this candle is super important for me, because it shows me where the wick was created, where the price is going, and when the price goes down, all right, so the price on the 4 hour, it actually is bearish. It's just good to look at what the high time frame is doing. So this is the indicator I use. It is PO3, power of 3. You can just go to the indicators, search HTF power of 3 by 2 degrees. Alright, that is the first indicator I use. Second indicator I use is for the fair value gaps. You can just search fair value gap, right? It's by Lux Algo. And the third one I use is ICT kill zones plus pivot by Trade for Op. This basically shows you all the liquidity sweep points. Just keep it as normal as you can, but if yours is a little bit different, just remember this timing for right now, right? Because of daylight saving, Asia is from 9 AM Singapore time to 1 PM Singapore time. London is from 3 PM Singapore time to 6 PM Singapore time, right? New York, I normally don't even look at New York, man, but New York for mine is set according to futures, because I trade futures more. So it's from 10:30 to 12. That's just the configuration for futures, but if I'm not wrong, the default is actually different. You can just keep it at default because it already sets it up for you. Alright, with that being said, I hope you guys learned a thing or two with this model. If you guys got any question, join the Discord, ask me questions there. I'll be more than willing to answer you guys. Alright, and yeah, and for that's all. And we hit TP. Alright, see you guys in the next video if I decide to make one. Ciao.